Ladies and gentlemen, welcome back to the channel. Here in this video, we will discuss all of the breaking news. We just got a speech from Scott Bessent that sounds good, okay? It's something the markets might like coming tomorrow morning. I will share that with you in this video, as well as all of your major catalysts for this week. Economic data, earnings, all of it. Ladies and gentlemen, the work is cut out for us in this video. Hit that like button and subscribe to the channel if you have not done so already. And let's get started. Okay, so first and foremost, last night, or yesterday really, Trump said Walmart should stop trying to blame tariffs as the reason for raising prices throughout the chain. Walmart made billions of dollars last year, far more than expected. Between Walmart and China, they should, as is said, eat the tariffs and not charge value customers anything. I'll be watching, and so will your customers. Now, that's important because of what Scott Bessent said today. He actually had a phone call with Walmart's CEO, and I think this is part of what, the markets might like tomorrow. Also this, Donald Trump said 5 weeks ago that it was a good time to buy stocks. And he said yesterday during this speech in Saudi Arabia that the stock market will go higher. So he seems to be more friendly towards markets now. Bessent says the U.S. is concentrating tariff discussions on 18 key partnerships. He says that he spoke with Walmart's CEO, McMillan, and he says that Walmart will absorb some of the tariffs as in 2018 through 2020, the first trade war with China. Bessent says the U.S. will impose tariffs if nations do not deal in good faith. And he says that we are seeing a decrease in services inflation and gasoline. He also calls Moody's ratings a behind indicator. This is something that I talked about over this weekend, and I'm surprised markets reacted so sharply, to the downside on this, because it was already expected. It was already I would think priced in. All of your other credit agencies like Standard & Poor's and Fitch have already lowered the rating. Moody's was the only one that had not, but we were already on a credit downgrade watch. So I was surprised to see the S&P fall 1%, and a lot of tech stocks just, go down a lot more than that on Friday when this came out anyways, because nothing changed. It's just acknowledging what already happened. And again, for anyone that did not watch the channel over this weekend, I don't think this is the end of the bull market or even a reason for a meaningful decline. I think probably tomorrow morning, you're going to eat that back up again, right? Wouldn't surprise me if markets are up 1+% tomorrow. I still think that 20% rally from now into year end is coming. Okay, I don't think this changes any of that. And Bessent says the Qatar aircraft would be a gift to the U.S. government. And Bessent says when he was asked about the U.S. credit downgrade, he says, I don't put much credence in Moody's. Bessent on the tax bill says we will grow GDP faster than the debt. So that would just mean essentially your debt to GDP ratio would go down. Bessent says the timing of deals depends on if countries are negotiating in good faith. And Bessent says, I think we will do a lot of regional deals. He also says again, we are determined to bring spending down and grow the U.S. economy. Now, as far as earnings this week, some notable names for sure. Tomorrow in after hours, Trip.com. Tuesday pre-market, Home Depot. Some other names as well. Tuesday in after hours, Palo Alto, Toll Brothers. Wednesday pre-market, Baidu, Target, TJX. Again, how is the consumer doing? Are they still spending money? That's what we want more details on. Walmart was a pretty good indication that the consumer is doing well. Okay, they said the consumer actually did well in April and is doing similarly in May so far. So that was really good reaffirmation on the strength of the economy. But Target tends to be a little higher priced, a little more discretionary. If Target has good things to say as well, that would obviously be a positive for this market. Wednesday and after hours, Snowflake, Zoom, Urban Outfitters. Thursday pre-market, Analog Devices, BJ's, Advanced Auto Parts, and Ralph Lauren, as well as TD Bank. And Thursday in after hours, Deckers brands. That's like Uggs, right? Expensive boots, shoes. That's not one I think the markets care about, but it's something, again, that's really discretionary. If they do well, then I think that's a good sign for the economy. Autodesk, Intuit, Ross, Workday, and some others as well. And then Boots, Allen Hamilton, big defense contractor, will be reporting Friday morning. So not major market moving earnings per se, but important ones. Home Depot, Target, TJX, Deckers, Ross, even Analog Devices, Snowflake for some of that AI software. Definitely some earnings to watch. As far as economic data coming out this week, Fed Bostic, Fed Jefferson, and Fed Williams will speak tomorrow morning at about 8:45 in the morning. Fed Logan speaks and Fed Kashkari at about 1:30. And that's pretty much it. You do have the CB leading index at 10 o'clock in the morning, expecting a pretty negative number for April. But that's all you have for tomorrow. On Tuesday, Fed Barkin, Fed Bostic, and Fed Collins speak in the morning. Fed Kugler and Fed Daly speak, as well as Fed Hammock in the after hours. That's it for Tuesday. Wednesday, you really don't have much either. Some oil numbers coming out, but that's pretty much it. On Thursday, you don't have much. You have Chicago Fed National Activity Index, initial jobless claims, S&P Global Composite PMI, flash numbers for May, manufacturing and services PMI for May, existing home sales for April, Kansas Fed Composite Index, Kansas Fed Manufacturing Index, Fed Williams, this speaks at 2 p.m. And then on Friday, doesn't look like you have much either. New home sales for April and new home sales month over month, as well as a speech from Fed Cook. So from an earnings perspective and economic data perspective, it is going to be a little bit more of a slower week. And I think, again, we're kind of just subject to the headlines here and, what positive or negative headlines we get. I do think with the, slowdown in economic data and earnings, it could give us a little bit more room to move. Okay. I think the bias at this point is clearly to the upside. I think Wall Street is underpositioned this market. I don't think I know that. There's a lot of things you can look at to show you that. And there's a lot of people that are still bearish. I think time is coming for a lot of them to not be as bearish. But I have been expecting a speed bump, so I wouldn't be surprised since we did basically just go vertical. Okay, we recovered this rally really fast. The percent of stocks trading above their 50-day moving average at 71%. That is on the high side. It could go higher, but definitely on the high side as of now. If you look at the AI Investor Sentiment Survey, you still have bears outpacing the bulls by about 9%. That's usually not how things work. Usually, like during let's say the end of a rally, normally the bulls are well outpacing the bears. So again, here's one thing you can point to and say people are still pretty bearish on this market, which after the framework of the China deal, you've lowered the odds of a recession. You've lowered the odds of an inflation issue. You've raised the odds that the Fed is going to be able to cut rates this year, all of which, last I checked, are positive, but also sub-positives, if you will, like maybe more clarity around earnings, a better, visibility into the future. I've said this on the channel many times before, but the markets can handle bad news. They can't handle uncertainty. Like uncertainty about what's going to happen, this or that, earnings, blah, 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 is like, it's just not good for investors. And I think a lot of that uncertainty is gone. So at this point, we can price in, hey, what's bad, what's changed, and how do we position for that? And I think if markets go any higher from here, you could start kind of a chase. What it seems like to me. The CNN Fear and Greed Index coming in at 71 in the high side of greed, almost getting close to extreme greed. Market momentum, extreme fear. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options, greed. Market volatility is neutral. Safe haven demand in extreme greed. Junk bond demand in extreme greed as well. So a couple of these categories being, in extreme greed, kind of swaying the overall number to be higher than what I think it otherwise would be. But hey, again, we have went pretty vertical, but I do think there is much more room to continue. Again, if we continue to get positive news on these trade deals. And I do think a 20% rally into year end is coming as we focus on AI again, as we focus on deregulation, lower taxes, and ultimately end this trade war once and for all. I think now is the time you want to be in markets, not fading markets. Just my opinion. Again, let me know what you guys think down below in the comment section. That is going to do it for this video. That's what you need to know heading into this week. Hit the like button and subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.